Hello and welcome to this week's macro and crypto update, where I share with you the most important news from the past week in macro and crypto, and I also share my opinions on the state of the cryptocurrency markets. Starting as per normal with the Australian economy, and it's been a rough start to the week, at least from the stock market side of things, with I think the biggest single day fall in the Australian stock market since February, and that has brought down the ASX 200, which is the biggest, I guess, the main index referenced in the Australian stock market. The ASX 200 is now back to where it was in June. So that's mainly being led by steep declines in major iron ore miners, iron ore being the biggest export in Australia, um, and mainly to our biggest Australia's biggest trading partner in China. It's the main export to them as well. So what's driving down? Why is iron ore price going down? As I've covered in past videos, was about 240 dollars US per ton in May. And just this week, we saw earlier this week it came down to under 100 and even towards $90 per ton, which is about it's about a decrease of 60, maybe up towards 70% depreciation in about what 4 or 5 months, which is just unheard of. That's kind of akin to price action you'd see in the crypto asset markets. So why has that happened? Supply and demand. From the supply side, Brazil's mining Brazil's iron ore mines have come back online in recent months. Um, After they were not operating due to COVID lockdowns. Brazil is one of the bigger iron ore miners in the world, Australia being the biggest. From the demand side, I think it's more important for you to know about. It's basically been driven by the lesser demand from China, for iron ore, that is, which has basically been a reflection. The reason for that is just a general slowdown in the Chinese economy. Um, and then that also ties into less demand for steel, which or iron ore rather, is almost like a precursor. You need it. It's involved in the process of manufacturing steel, so that's why you always see iron ore and steel. Typically, will the price of them will be correlated. So that's very important to know because such a huge crash in iron ore's price has big ramifications, as covered for the mining sector in Australia, which is relative to other countries is very big as a proportion of GDP, or gross domestic product, which is the measurement of an economy, or at least the most used measurement of an economy. So that's why that's important to know. And yeah, one of the big reasons for a weakening of Chinese, or speaking of, I suppose, the Chinese economy and a weakening demand, uh, there's been a ton of news about this Evergrande debt crisis. Um, so this is something that's been going on for a few years now, and even all of this year, you've seen headlines about the Chinese property developers just being in some strife financially. Um, but it's really come to more, I suppose, of the mainstream media, and the mainstream business media has been covering this a lot more in the past few days, in the past week, particularly because Evergrande, which is the biggest Chinese property developer, yeah, there's really a lot of questions now over their solvency and um, their ability to, yeah, remain solvent. It's, as I've said, it's been going on for a few years, where these property developers will continue to issue debt, and then it'll kind of keep them afloat, and then they'll just issue more debt, stay afloat, meet their operations, continue to operate, continuing to sell property to kind of like local Chinese governments, which for Chinese local governments, it's kind of their main, for many of them, it's their main source of revenue, is these kind of deals with these property developers. So, but it's kind of like almost like the rubber's meeting the road now, really. And this Thursday, so what's that? That's the 23rd of September. The firm is that's the date everyone's kind of talking about with respect to this Evergrande news, and this debt crisis where they have interest worth $83 million US will fall due essentially. And whether or not they pay that is what everyone's waiting to see. Um, people's uh, are like almost drawing comparisons to the GFC, but I don't think I don't think it's that severe. The GFC was much more of a shock, and was yeah. Whereas this stuff with the Chinese property developers and their bond prices have been suffering for like their corporate bond like prices have been suffering for many months now. Um, so like in terms of whether this if this collapses, this Evergrande, the direct like connotations, like the really direct like those bondholders, like they won't suffer. It's not going to be like a radical thing that just comes out of nowhere. Like I think people know that their bonds are super risky. Um, but it's more just what I want you to understand and what the bigger deal with all of this is the indirect implications of this because like Evergrande is just such a big company and property developer that if that was just to collapse, it would just have massive ramifications for the price of property in China and the employment, the labor market in China because people will lose their jobs. And then just essentially just consumer spending in China will suffer because people will have their wealth effects, which wealth effects in economics is just essentially just this phenomenon where you'll kind of as your asset prices or as the value of your assets appreciates and you become more wealthy, your propensity to spend is increased because you feel more wealthy. You'll go out and spend money on things like cars and clothes and luxury items. Um, so the wealth effect of Chinese citizens, if this Evergrande collapse does happen, that will suffer. And why does this all matter to you? It's just because of how the past decade really like China has essentially carried the global economy in terms of at a time when all of these developed nations have had really sluggish economic growth. China's I suppose like relatively high economic growth has really carried the global economy and stimulated a lot of economic activity. I know here in Australia, like things such as tourism and student education, so like universities have been a huge benefactor of China's I suppose booming middle class and booming upper middle class. Um, and then also obviously things such as like mining. So when as China's economy strengthens, they need more iron ore. So demand for iron ore goes up, which positively impacts countries like Australia. But that, yeah, not just that. You've got like European countries, luxury goods. You've obviously seen all the explosion in valuations for companies like Louis Vuitton and um, there's some other French companies like such as high-end like champagne and wine has all just like exploded in the past like 5 years or so. A lot of it has been driven by Chinese demand. So that's what I want you to take away from this is if this like this is what the biggest concern is, in my opinion, is the ramifications of this Evergrande news on the performance of the Chinese economy. And if there is a severe slowdown, and if it does contribute to a slowdown, even more slowdown, because China's economy has been slowing down now for 5 years or so. That's what I want you to take out of it is it's just going to be very hard for economies like Australia to really perform well when their biggest trading partner has is really like not as strong as what it has been recently. So yeah, definitely going to be watching this space. Another kind of narrative or off spin of this is just the whether or not Beijing will provide direct support to Evergrande. Um, again, because there's this, you'll see this term mentioned a lot in the coming days and weeks called contagion, which is essentially when there's a huge problem in one industry or one sector, um, it then that problem then trickles through to other sectors. So that's what contagion is essentially in economics. Um, so will Beijing come in and help and bail out Evergrande? Um, there's some analysts are thinking that if it's obvious that there'll be if there's signs of far-reaching contagion, so um, yeah, to other industries in the Chinese economy and potentially even other countries, then that's maybe when the Chinese government would step in. But that's basically going to be the one of the biggest discussion points over the coming weeks, and so I'll definitely be covering this more, I'm sure. Um, and I'm sure you'll be seeing a lot more of news about Evergrande in the coming days and weeks. Also this week on Tuesday and Wednesday, US time, the US Federal Reserve, so the central bank in the US, will be meeting. Um, and as I've covered in previous videos, the most important thing to look for when you have press conferences by Federal Reserve um, chairpersons is really just the language and the posturing. So what they do with their language is send signals to investors, and it's just so heavily watched by investors and economists. And it has, like, in my opinion, like, yeah, such a huge, it basically drives markets. So what everyone's going to be watching for this week is whether the Fed acknowledges that they're going to start slowing down their purchasing of bonds and mortgages before the end of this year. So if they say that they're going to start easing those purchases before the end of 2021, I would expect stock markets to even fall further in the short term, especially because of how fragile and how spooked the market is at the moment. So if they don't really allude to that in their comments, that will be good. That will be good news for the stock market. And yeah, there's an expectation the Fed will begin to taper in December, and by the middle of next year will have stopped. So again, if that expectation is kind of refuted by the Federal Reserve chairpersons and their chairman Jerome Powell, and if that's kind of yeah, refuted, that will be you would expect to see, or I would expect to see stock markets perform well in the short term. Just one thing I want to mention here, closing up global macro, is just I just want to emphasize this continual issues with the supply chain globally. So I really still don't think this is getting enough attention in the news and just the general public. So yeah, just the explosion in the amount of the price of shipping globally. It's really just leading. Um, it's just caused, or not caused by, like, the rising shipping is a result of just shortages in supply, which has been caused by the COVID pandemic, essentially. So leading up to Christmas and Halloween and Black Friday, or the Thanksgiving holiday in the US in late November, and I know there's another one. I think November 11 in China, it's Singles Day, which is just a huge. I think it's the biggest online shopping day in China. With these events coming in the next in the coming weeks, really, it's just going to get so much worse than what it already is. So you're already seeing, like, retailers actually taking it into their own hands. Like, they can't be bothered dealing with all of these labor shortages and all of these wait times to unload cargo ships. Um, so they're actually now chartering their own vessels, and, like, you've got the likes of Lululemon is adding extra air shipments to try to sidestep overburdened ports, for example. So I just want to bring this up for you because it's just, in my opinion, it's not really getting enough attention. It's really going to start again impacting the prices of things. So that's when we're at a time when inflationary pressures, we don't really want to be seeing any more signs of this. I think it's not going to go away anytime soon, and it's going to keep inflationary pressures stronger than what the central banks would be liking. Okay, just want to start off the crypto segment this week by um, covering some data here from, well, this one's from CoinSpot. They have officially hit 2 million users. So I want to start with this because it's not often you see data come out of exchanges in terms of their users. So anytime there is, I always like to pay attention to that. And what I noted here was that CoinSpot had doubled its customer base since February, so from 1 million to 2 million users between February and September. It kind of just signals how fast crypto is entering the mainstream. Because CoinSpot is one of Australia's biggest crypto exchanges, and they've been around since about 2015 or 2016. So to see them in between February and September double their entire user base was just, yeah, it was really like even surprised me. So yeah, seeing all the Australian exchanges really like Independent Reserve and BTC markets, CoinSpot and CoinJar even, they're all just like continuing to perform really well. And it's great to see after all their years of I suppose being around, they're still leading the charge in terms of homegrown Australian exchanges. So Melbourne team, oh yeah, I wanted to also mention this that CoinSpot and CoinJar have had really successful sponsorships this year because they've actually started sponsoring what has turned out to be the two Australian rules football AFL teams that are now in the grand final this week. So they've turned out to be two great picks by those exchanges, and it's essentially yeah like a crypto exchange grand final in many ways. So their sponsorship will continue to be all over the uniforms and the signage and things like that. So that was kind of it's just great to see just more mainstreaming of the crypto industry here in Australia in particular. Okay, staying with exchanges, and I wanted to mention this Coinbase Prime is launching and it has updated capabilities at least to what their I guess their beta version was. Anytime Coinbase gets mentioned, I always pay attention. I want you the viewer and the members to pay attention as well because anything that happens with Coinbase is just such has such ramifications for industry trends and also implications as far as like the state of regulations goes, as we'll get to in a minute. But in this case, Coinbase Prime is launching its or the most comprehensive platform for institutional investors. So this platform combines advanced trading, battle-tested custody, and financing in a single solution. Um, so no, very positive development there for the crypto space and particularly the institutional side of things. Having what is prime brokerage is something that's been coming for a while. It's been behind the scenes. I do remember covering it last year, about a year or over a year ago now, because I kept seeing all of these announcements that were essentially hinting that prime brokerage was about to get a lot better in the crypto space. What even is prime brokerage and why does it matter and why should you even care about it as just an investor who might just have Bitcoin or ETH, for example? Prime brokerage describes a bundled group of services that a financial institution offers hedge funds and other investment management firms. So services that a prime broker would offer would be lending, best execution, custody, clearing and settlement, derivatives trading, and capital introduction. So it's very important for institutional investors, but as a retail investor, it's still very important to know that this stuff is coming. And well, in Coinbase Primes, from their standpoint, it has arrived because it essentially just makes interacting, getting exposure to the crypto asset class a ton easier for institutions who just want to go to a provider that just has all of their needs. So we saw last year Coinbase acquired Tagomi, which at the time was one of the biggest institutional brokers in the space. Um, and so now, like we're in May 2020, and now September 2021, the launch of Coinbase Prime is would essentially be the end of Tagomi being integrated into Coinbase and all their internal systems and all their knowledge from the team being integrated. And now we've got this launched 15, 16 months later. Um, so yeah, the continued arrival of institutions is something I've been covering in previous weeks, and this announcement by Coinbase has me very excited that it's just going to continue. Staying with Coinbase, and today was a huge news that it was actually retracting their not yet launched lend program or lend product. Um, it was an interest yielding product that you see on a lot of other exchanges, like I know Binance, Gemini have them, for example, where the users essentially just deposit, Bitcoin or Ether or a stable coin, and they earn like, 2, 3, 4, 5% interest per annum, compared to 0 to 0.5% on a bank account. That is like super appealing. Um, However, so like why did Coinbase not do that? Why did they actually scrap their plans? It's because we saw this threat come from the SEC, or the Securities and Exchange Commission, which is one of the main regulators or watchdogs in the US. So they actually threatened to sue Coinbase, believe it or not, if Coinbase released this lend product, because from the SEC perspective, it contained components of like non-registered securities or unregistered securities. So it was a lot. That was notable because it was a lot more of an aggressive stance or active stance by the SEC compared to previously, especially with respect to the crypto industry. So um, we've seen again the past few weeks just this increased posturing and language from the SEC, which, going back to my point about the central banks, when regulators speak publicly, it's very deliberate, and it's very what they choose to include and what they choose to omit is very calculated. So when you see someone like Gary Gensler, the chairman of the SEC, starting to more actively talk about the crypto industry and talk about his wanting and his demand for more oversight of the crypto sector, that's when you know very strong signal that there's going to likely be more news to do with the SEC and crypto in the short term. Um, and yeah, we had, as I said last week, Gensler hadn't really talked much about crypto in his first few months, and everyone was kind of a bit. There was a lot of optimism about his hiring or his appointment as the SEC chairman because of his experience with teaching blockchain classes in MIT, um, and yeah, his knowledge of the crypto space. Um, and then yeah, he was quiet for a while, and only 3, 4 weeks ago, he really started increasing his language and getting a bit more, I suppose, aggressive, maybe a bit weaker, aggressive, probably for lack of a better term, probably a bit weaker than aggressive, but he's essentially just really wanting the process sped up to get some clarity over how much he and how much the SEC can actually get involved with regulating the crypto space. Um, so I'll get to that at the end of this video because it is the main thing I'm looking forward to, or looking at monitoring over the coming days. Okay, just going over, just a big theme of last week was just continued, or not continued, but it was a strange week of just a lot of just network issues and technical problems with these blockchains. Layer one blockchains, smart contract platforms. When you hear those words like that, it's essentially just another word for blockchain at this stage. I just want to clear that up because there was a lot, I suppose there was a lot of issues with these smart contract platforms that are sometimes described as like Ethereum competitors. Um, so that's something I just want you to be aware of. Solana was the biggest one that had issues. There were some other ones like Harmony blockchain had some minor issues. Secret Network had a pretty severe one where they actually had to upgrade their whole blockchain or their whole network. Um, and I think Ethereum had an issue with one of its clients, but that was actually kind of like an unsuccessful kind of attack, so that was okay. And Arbitrum was probably one of the more severe ones where that was a layer two scaling solution on Ethereum, which actually Arbitrum actually went down for a little while. Um, so with Solana here, it was down for actually 18 hours, which was yeah very or 17 hours, which was yeah a very long time for a layer one blockchain to be down for. It was due to a flood of transactions caused by bots, is what the Solana Foundation concluded. Um, and essentially, they're saying it was a denial of service attack, which is yeah, just when there's a flood of activity that tries to overwhelm a network. Ethereum used to suffer from this back when it's launched, like in 2016 and 2015. But yeah, I think from all reports, Solana is back up and running. So again, I just want to highlight, why am I telling you this? I'm telling you this because it's just a reminder of how primitive and experimental a lot of these networks still are. That's one thing I think it's easy to forget when you're deciding to invest, for example. Um, it's just so yeah, it's just still so young and experimental. This technology is the lowdown of what I want to get across to you. So do keep that in mind. That um, yeah, you could just essentially lose all your money. In the most severe case, you could lose all your money due to some sort of bug or network, yeah, some sort of software issue. Um, that's in a very extreme case, but it's good at least to have that mindset or have that as a consideration. Um, so you're not surprised if it does happen, especially to ones that are more a newer blockchain, um, such as Solana or something else. Speaking of which, um, there's also exploits happening on top of these layer one chains or on apps and projects that deploy their solutions on top of blockchains like Ethereum or Solana or Avalanche. So if you're investing in, that project's token, that's something that I really strongly encourage you to keep that in the back of your mind, that you could actually lose all of your money if that project's smart contracts aren't coded correctly. So in this case, it was V Finance suffered a $35 million exploit, and that is a platform that is deployed and runs on top of Avalanche. So in this case, it wasn't the Avalanche blockchain that was hacked. It was a DeFi platform that was built on top of Avalanche. So yeah, just there's never a week goes by where I don't cover any hacks for in our members kind of posts and um, especially yeah for our pro members. So it's just a reminder, honestly. Like it happens most days where there's a hack, and it's just part and parcel of investing in the space, um, especially if you're non-technical. Um, it can be a bit harder to obviously know if a project's code is very I suppose impressive and high quality. So there are things you can use as proxies to kind of gauge how much quality the code is, or if there aren't any potential exploits. So things like that, you would look for security audits by smart contract auditors. Ideally, you'd want two or three separate, independent, third-party auditors to go over the same code, but that is very expensive for these projects and these startups, essentially. And it can take a lot of time to get these reports done because a lot of these auditors are actually backlogged with the amount of demand at the moment. Um, and also you can use a proxy, could be, I don't highly recommend it, but if the project does have really reputable venture investors and seed or angel investors, sometimes that can be a good proxy for um, knowing that the code is like a decent quality. What you can get into there, and why I don't recommend it so strongly, is if every investor is assuming the other investor has done their DD or due diligence, that can be a very vicious cycle where if they all assume the other one has done their due diligence before investing and no one actually has done it that rigidly, then you can get a case where projects raise a lot of money, but they're not actually that great a quality, and you see that in frothy bull markets in crypto all the time. Okay, OpenSea executive accused of insider trading resigns. So last week, this was very, yeah, news that shocked and rocked the NFT space. Was OpenSea is the largest NFT marketplace. So NFTs are non-fungible tokens. Um, yeah, so their head of product resigned following allegations of insider trading, where they were essentially front running OpenSea customers. The allegations were if OpenSea has this front page of their website where they list and they put the spotlight on certain NFT projects, and typically once they do that, the price of those NFTs will increase. So what this person was alleged of doing was buying those NFTs before they hit that OpenSea web page. This is kind of the biggest. Why do I want you to know about this? It's mainly because of a reminder of just, I suppose, the perils and issues with centralized companies or centralized platforms where there's almost insider knowledge of certain listings and things like that, which you wouldn't see on more decentralized trading platforms such as the likes of Uniswap protocol or Sushi Swap or Sushi protocol. Um, that was the biggest takeaway, and even for a company as successful as OpenSea, and this had a product, likely would have had a part ownership or like some shares or equity in that company. To throw it all away for, or to put himself at risk like that was kind of really surprising and pretty disappointing if those allegations are true. It's one other takeaway I want you to understand is also the I guess just the transparency of blockchain addresses. So this was really just figured out by a community member, um, and he posted it on, or he or she posted it on Twitter, and just asked some questions about, hey, this on-chain activity, just it looks like every time there's these projects, there's always the same address is always buying these NFTs before they get listed, and they figured out that that same address was doing it on multiple NFTs, and then it kind of just demonstrated that really anyone can, with the right tools and know-how, can go in and investigate and scrutinize and analyze on-chain activity to ultimately figure out or strongly allege rather that this person was inside trading. Um, so yeah, there's that. It kind of brings the question now, is OpenSea right for disruption? Obviously, a huge, lost heaps of trust with the community in terms of, um, yeah, like OpenSea, their own, I suppose, head of product was really just like, um, not exploiting, but like, I guess, taking more of the opportunity before OpenSea users. Um, and just on that, if you're still with me, is OpenSea that so like they're also very vulnerable in terms of trust now. And just today, actually, OpenSea has just been really struggling with a bunch of scams on their website, are really getting more sophisticated and um, causing NFT collectors to lose their whole collection of like sometimes like multiple hundreds of thousands of dollars worth of NFTs, all from within the OpenSea website, which then leads to a phishing or website, a phishing copy of the website. So OpenSea is kind of really going through some hard times at the moment. And Nick did a great post for members today of potential disruptors of OpenSea. So other NFT marketplaces. Some ones he mentioned were Universe, which is coming out with their NFT marketplace, I think in early November. I think that's their plan at a launch party in New York, an NFT event. They're releasing essentially a decentralized NFT marketplace. NFTX came out earlier this week or on the weekend announcing an NFT marketplace. NFTX, yeah, I think it's called their marketplace. I think they announced is called NFTX.io is the name of it. And then yeah, Show You is a product by the Sushi team, which is also going to be an NFT marketplace. I saw another one, I think earlier today, um, in our which I put in our project discovery call. Um, that one is called Looks Rare. So that is, I think it's like it's pre-launch at the moment, um, but you can see that there's a bunch of like potential there are a bunch of potential yeah competitors to OpenSea um, coming soon. There's one I'll share with you in the show notes. Um, but yeah, I think if anyone is ever going to overtake OpenSea in terms of like NFT trading volumes, it's right now. But to be honest, I think they still account for about over 90% of NFT trading volumes. So I definitely wouldn't expect it to happen overnight, but it will be exciting to monitor the growth of these emerging NFT marketplaces. Not to mention the platforms that are live at the moment, such as like Foundation, um, and Super Rare and others. Staying with NFTs, another huge week. Today was just kind of again, and I just want to signal to you just how much they've entered the mainstream NFTs. So Snoop Dogg this morning, 19 million followers on Twitter, obviously famous musician as everyone would know and actor, and he's involved in many things. He came out and essentially revealed that he is the person behind this Cozomo Medici NFT profile, that is, well, had been anonymous up until today, but 30,000 followers. I saw that's exploded in one day, but they're essentially just been a Twitter account that's been sharing their thoughts on certain NFTs and the state of the NFT market. And for it to then come out that it was someone as famous as Snoop Dogg earlier today, was just again, I had to step back and kind of just be like, wow, like no one knew what an NFT was earlier this year. There's still such a huge percentage of the population that have never heard of NFTs, and we're already seeing NFTs doing such a better job of anything else ever in the history of crypto assets. NFTs are already doing the best job of permeating kind of the mainstream. So yeah, super exciting one I wanted to share there. Sorare just today announced a 680 million, so $680 million raised for its fantasy sports NFT game, a Series B round which was led by SoftBank. That is enormous for a Series B round, and it values the company at 4.3 billion. So Sorare is a fantasy football or a soccer platform that's based on NFTs, and it's also deployed on Ethereum. What makes Sorare unique is it's partnered with 180 football organizations, including some of the most famous clubs in Europe, such as Real Madrid and Liverpool and Juventus. So yeah, just extremely such a that's an enormous raise for such a young company. They have been around for a few years now. I think they are one of the, I suppose, oldest NFT companies. But it really just again is just a strong signal of how much capital is want has seen how the conviction of investors at the moment of the product market fit essentially in the value proposition of NFTs, um, you're seeing this reflected with raises such as this. Is this a sign that things are getting too frothy? Short term, potentially, but I think the opportunity like really is just so misunderstood at the moment. So I still think Sorare can eventually grow to become a much bigger company with such a huge opportunity as a global sport such as soccer. I think it is the biggest or most played sport in the world. And again, the value of NFTs in relation to this is just more engagement from, or a greater opportunity for sporting clubs to engage with their fans and um, for fans to feel like more part of, build a deeper connection with sporting clubs is the biggest value prop there. And obviously collectability, like humans love collecting things. So that's definitely already a proven kind of demand there for their platform. Just a reminder that these kinds of raises are being mentioned every Sunday in Sarah's Sunday Fun Day on the member platform, and just kind of reflecting the state of the NFT industry or sector at the moment. Like every week, there's always NFT raises, like guaranteed in every issue of the Sunday Fun Day. Last week it was Immutable, so the Sydney-based team. Yeah, they raised 60 million in Series B funding, and Stardust here announced 5 million. Audius is even one that integrates NFTs. They raised 5 million as well. And arguably Forefront, I think technically do NFTs as well, and they announced 2.1 million. So every week, just you're seeing NFTs always be a portion of all the crypto company and project raises for that week. Okay, Bitcoin price time, just as I take a drink. So today it was a another huge sell-off. Again, just that short term and for a little while yet, anytime stock markets or move volatile, are volatile rather, I expect Bitcoin and the crypto markets to move in correlation with it. It's just I know people like to think of Bitcoin as this sovereign kind of detached asset class, um, but reality is it's still all really borderline experimental technology and very young technology. So I expect it to essentially be a risk-on type of asset, just like the tech stocks and like the Nasdaq index in the US. Whenever there's a huge risk-off event, such as like a threat of maybe bringing in like easing the monetary stimulus, as I talked about earlier. Maybe if the US comes out tomorrow and says they're actually going to kind of bring forward their dates that they start to ease their monetary stimulus, that would spook the stock market, which would cause stock values to drop, and that would definitely, in my opinion, I cannot see a situation where that wouldn't be demonstrated and reflected in Bitcoin and crypto prices crashing. So that's just an example there, and we saw that again today. So so yeah, that's just like people always tend to describe Bitcoin and crypto, the value prop of them, and it kind of contradicts what actually happens where there is still a strong correlation. So yeah, as covered in this Bloomberg piece, it did bounce off. Bitcoin did bounce off $40,000 and fell to as low as 40,200, which hasn't been seen since early August. Which many technical analysts were kind of seeing that 40,000 level as like strong as the support level for Bitcoin, and it did end up bouncing off of that support level. And at the time recording, it's actually bounced up almost 10% to 43,500. But yeah, there was just a huge crash in response to this recent stock market crash, which was mainly driven by the Evergrande news. So 48,300 down to 40,000, just a just that volatility is just you just don't really see that in many other asset classes. In terms of like oversold territory on the daily chart, the RSI is kind of uh, down at about 40, so not really oversold territory. The RSI being a real momentum indicator. Um, so on the 4 hour, I dare say, just quickly, that might be a bit of a different story. Okay, yeah, so I did spend a lot of today and yesterday in oversold territory, and now is just coming back to not oversold territory. Um, but yeah, a lot of people did use this as a buying opportunity. I personally did. I purchased some ETH earlier today at I think about 2,900 US dollars. Do I like could that go? Could ETH, for example, fall to like 2,000 in the coming weeks? It could. Like I definitely understand that. But for me personally, I'm more looking to hold ETH for, 5, 10, 20, 30 years. And ultimately I'll always, at least in my circumstance, I will always be holding some portion of ETH. So I'm not too fussed if it does drop to 2,000 and maybe even 1,500. I might even buy some more at those prices. But in saying that, like I just continue to see such strong buying action in buying of all of these dips that have happened recently. And just the amount of, I guess, upcoming catalysts and all the innovation happening on Ethereum is what makes me ultimately like the most like super bullish on ETH in particular, but rather I'm still very bullish on just the asset class in general, and that includes Bitcoin as well, which is also got a lot of good fundamental drivers for it in the long term at least. But in terms of like super, super short term price outlooks, I'm not a technical analyst, but so I couldn't tell you, and I honestly don't think a lot of people saw that big stock market crash coming either. So as I said, it could go down to towards 1,500. I wouldn't expect it to go that low, but um, what I am kind of, I suppose, looking for is just a continued bounce off of that decline to 2,800. Um, and then in the case of Bitcoin, you'd hope to see another close above that 200-day and 100-day moving average, which it has rebounded above that 100-day moving average. Um, and is looking at closing above that, which is important. And then again, long-term trend wise, closing above the 200-day moving average, which it has lost, which is very noteworthy. So the bulls will be wanting Bitcoin to close above that 200-day moving average. It's just a very important long-term trend that's watched by traders all around the world. Just one last thing I want to close on. Um, in terms of what I'm looking at in the coming days and weeks, activity on Arbitrum has kind of been a bit of a not a letdown, but um I suppose it's just been it's really just fallen precipitously since last week. Um in saying that, there are still a lot of solutions that are coming that is still yet to deploy on Arbitrum, such as like Aave and make a DAO, things like that. But yeah, I did want to note that because if Arbitrum doesn't really get much more adoption in the short term, um, that will concern me, especially because we saw news during the week that Optimism is actually essentially going to, it's not a delay as such, but they've done it in a roundabout delay in a way. They've really made a technological breakthrough, which is good in terms of making it easier for projects to deploy on their layer two platform, optimistic Ethereum. But now they've figured out this technological breakthrough, and that's not really now going to be deployed on mainnet until late October. So until then, it's going to be like another, it's because they're going to stay with this whitelisted kind of launch. So projects will deploy on Optimism at a lot slower rate than Arbitrum. And that uptake of layer two solutions is going to be a bit slower than what it otherwise would have. That's important because the slower the uptake, the less that the less pressure, or in other words, I suppose the longer this goes, the more pressure there's going to continue to be on Ethereum gas fees. And that's not good because the longer those gas fees persist, those higher gas fees, the more irritated everyday users will become, who might get more lured to lower cost chains such as Solana and Avalanche and Phantom, Near Protocol, Binance Smart Chain, um, just to name a few. There's like Cello as well, or Cello. Um, so it's going to be interesting to see. That's one thing I'm basically looking at over the coming days, and just monitoring Ethereum gas prices because they are just like so crucial for the probably the short to medium term, I suppose, success, for lack of a better term, of Ethereum. And I will drop that announcement from Optimism in the show notes below. Okay, and what am I looking forward to, or looking at, or expecting in the next coming days? It's this essentially this presentation or talk by Gary Gensler, the SEC chairman. So he did announce today that um, I suppose tomorrow, what is it, September 22 US time, at midday, he will be um, going live with the Washington Post to talk about cryptocurrency. So as I said, these like presentations and remarks is like so important for you to be for you to be paying attention to. And I look forward to kind of keeping up to speed on like what the most important takeaways were, because it can be hard to keep up to date with, obviously, but this is the most important thing that's going on in the industry at the moment in terms of this, I guess, the continued involvement of SEC in the crypto industry. And we did see rumors, um, or not, yeah, strong rumors, or I guess, how do you phrase it? Uh, they weren't verified, or but there was enough people who said it happened today at Mazari's mainnet conference in New York that the SEC um, attended the conference and issued a subpoena on at least one DeFi core team member of a DeFi project. That the yeah the project hasn't, or that individual or individuals hasn't come out and verified that that has happened, and the identity of them isn't known yet. But several sources have come out and said that they saw it happen. And Ryan Selkis, the CEO of Masari, said that yeah, at least he saw at least, or he at least what did he say, reported that at least one person had been issued a subpoena, and that was actually the SEC kind of attended that like conference without even, they actually rejected Mazzari's offer to um, of like discounted passes to get kind of regulators involved in the conference. Um, and so yeah, um, that's something that I expect to come out in the coming days, or even tomorrow, to be honest. Um, and what these comments are from Gensler tomorrow will be watched very closely by myself and everyone else in the crypto industry. Um, so yeah, other than that, a bunch of project launches coming up, which we've got Nick covering every week on the member platform. Upcoming project launches. that which I'm looking forward to seeing, and yeah, continuing to bring up to speed on new discoveries that we're seeing, or new projects that we're finding in the space, and also just sharing our opinions on the state of the market, and our opinions on almost sectoral trends going on in the crypto ecosystem. So we'll leave it there for this week, and I'll tune in and hopefully tune in next week on either the YouTube channel or the podcast for those of you listening. So hope you're all staying safe in lockdown for those of you in Australia, and take care. Bye.